Hello, friends. It does not always take a massive overhaul to change what lands in your bank account. Sometimes it is one small thing, one update buried inside an SSA processing guideline that nobody translated into plain English, one threshold that shifted by a few $100s, one form that someone filed or didn't file that quietly changed the number arriving in a monthly deposit for years going forward. That is exactly what we are talking about today. The Social Security Administration made a change. On the surface, it looks minor, the kind of thing that gets posted in a federal update and immediately gets ignored by everyone except the people whose accounts it directly touches. But for those people, and there are more of them than SSA's communication style would ever suggest, this one small change has an outsized impact on their monthly check, bigger than most people would expect from something this easy to overlook. I have gone through exactly what changed, who it applies to, and what the real dollar difference looks like when this kind of shift compounds over months and years on a fixed retirement income. Because on a fixed income, a small change is never actually small. A $60 monthly difference is $720 a year. Over 10 years of retirement, that is $7,200 from one change that nobody sent you a letter about. Stay until the very end because the last thing I cover today is the place where this specific change creates the largest impact, and it is the category of retirees that SSA's communication consistently reaches last. And if SSA Now is the channel that translates what SSA does into what it actually means for your check, subscribe right now and turn on the bell. Small changes compound. The people who know about them in time can act on them. The people who don't find out when the compounding has already done its damage. Let me start with something that matters before we get into the specifics. The way SSA communicates changes is built for administrators, not retirees. Policy updates go into federal registers and processing guideline documents written in language that assumes the reader has a background in benefits administration. The average retiree sitting at home waiting for their deposit date to arrive has no access to that translation layer. They find out something changed when the number in their bank account is different from last month. And by that point, the change has already been running, sometimes for months, before anyone noticed. That gap between when SSA updates something and when the affected retiree understands what happened is where real money gets lost. Not through fraud, not through error necessarily, just through the ordinary silence of a system that does not prioritize explaining itself to the people it serves. What I do on this channel is close that gap. Today's video is exactly that. Here is the change SSA made and why it matters more than it appears. SSA updated its internal processing threshold for earnings-based benefit recalculations, specifically the trigger point at which a post-claim earnings year qualifies for automatic benefit adjustment. The adjustment is modest in percentage terms, but the downstream effect on retirees sitting near that threshold is meaningful, immediate, and in most cases completely invisible without someone explaining what just happened and why. Let me break that down in terms that actually make sense. When you claim Social Security and continue working, SSA reviews your earnings every year. If what you earned that year is high enough to replace one of the lower years in your top 35 earning years, your benefit goes up automatically. The trigger point, the minimum earnings level that qualifies a year for replacement consideration, has been adjusted. For retirees whose recent working income lands near that threshold, the difference between qualifying and not qualifying for an automatic recalculation is a monthly benefit adjustment that compounds permanently going forward. Some retirees who previously just missed the threshold now qualify. Some who previously qualified may be interacting with the new threshold differently depending on their specific earnings pattern. And the retirees sitting closest to the line, the ones for whom the threshold shift is most directly relevant, are the ones least likely to have received any communication about it, because SSA's notice protocols for this type of internal adjustment are essentially non-existent at the individual level. If you worked in 2024 or 2025 while collecting Social Security, and your annual earnings from those years were anywhere in the range of $15,000 to $35,000, the updated threshold is directly relevant to your situation. Log into SSA.gov and open your full earnings record. Look at what SSA has on file for those years and compare it against the earnings years currently sitting in your benefit calculation. If a recent year qualifies for replacement under the updated threshold and that replacement has not yet been reflected in your benefit amount, you are entitled to request that SSA complete the recalculation manually rather than waiting for the next automatic review cycle. Call 1-800-772-1213 and ask SSA specifically whether your 2024 or 2025 earnings have been reviewed against your current benefit formula and whether a recalculation is pending. That one call can surface an adjustment that would otherwise take months to arrive on its own. Now, let me connect this to something larger, because the earnings threshold change does not exist in isolation. It interacts directly with how Medicare premium surcharges are calculated. It interacts with the earnings test for people who have not yet reached full retirement age. And it interacts with the benefit amounts used as the baseline for survivor benefits, meaning a change to your benefit today can ripple forward into what a surviving spouse receives years from now. Let us go through those interactions, because this is where one small change starts producing effects that feel much larger than the original update suggested. The Medicare premium interaction first. Your Medicare Part B premium is determined by your income. If your recent earnings, including income from working after you claimed Social Security, pushed your reported income above certain thresholds 2 years ago, Medicare applies a surcharge on top of the standard $185 monthly premium. That surcharge is called IRMA, and it comes directly out of your Social Security deposit before the money reaches your account. Here is where the interaction with the earnings threshold change becomes important. If the updated threshold means your 2025 earnings now qualify for a benefit recalculation, meaning your gross Social Security benefit is going up, but your 2024 income also crossed an IRMA threshold and triggered a surcharge, the net effect on your monthly deposit depends on how those two numbers interact. A benefit increase of $40 a month means nothing if an IRMA surcharge is simultaneously pulling $74 or more from the same deposit. The increases and the deductions have to be understood together, not in isolation. This is exactly why SSA's piecemeal communication style fails retirees so consistently. The agency sends separate notices about separate changes without ever showing you how they combine in your specific account. The result is a retiree who knows something changed but cannot tell whether they are better off, worse off, or simply running in place while multiple adjustments cancel each other out. Drop a comment right now and tell me, has this happened to you? Have you received notice of a benefit increase and a premium increase in the same period without anyone explaining whether you were actually coming out ahead? I want to hear from you, because this is one of the most common sources of confusion I see in this community. If your Part B premium is above $185 right now and your current income is lower than your 2024 income because of retirement, reduced work hours, or a one-time income event that no longer exists, you have the option to appeal your IRMA surcharge regardless of the earnings threshold change. The form is SSA 44. You document the life-changing event that caused the income shift, provide evidence of what your income actually looks like today, and request that SSA recalculate your premium based on current reality rather than a 2-year-old return. When approved, the surcharge reduction increases your net deposit immediately. Download SSA 44 at ssa.gov. Now, the earnings test interaction. If you are collecting Social Security before your full retirement age and you are still working, the earnings test applies. In 2026, the limit is $23,400 for people who will not reach full retirement age this year. Go above that, and SSA withholds $1 for every $2 you earn over the limit. The updated earnings threshold for benefit recalculations exists in a separate part of SSA's system from the earnings test. But for retirees who are working and collecting before full retirement age, both mechanisms are running simultaneously on the same income. What that means is that earning more in a given year can trigger a benefit recalculation upward under the updated threshold, while simultaneously triggering earnings test withholding that reduces current payments. These are not contradictory. The withheld amounts get credited back once you reach full retirement age. But without understanding both mechanisms operating at once, the deposit fluctuations feel random and alarming. If you are under full retirement age, working and collecting Social Security, track your annual earnings carefully against both the $23,400 earnings test limit and the updated recalculation threshold. Knowing where you stand relative to both numbers lets you make informed decisions about hours, income, and timing, rather than discovering the consequences reactively in a deposit. That does not look right. Now, the survivor benefit interaction, and this is the one I told you to stay for. Your current monthly Social Security benefit is the baseline from which your survivor benefit is calculated. A surviving spouse at full retirement age is entitled to up to 100% of what you were receiving at the time of your death. If your benefit increases as a result of the updated earnings threshold recalculation, even modestly, that increase is embedded permanently in the survivor benefit your spouse would eventually receive. On a $2,000 monthly benefit, a recalculation that adds $50 per month feels modest in the present. but that $50 becomes part of the survivor benefit baseline. Over 15 or 20 years of a surviving spouse's life, it represents $9,000 to $12,000 in cumulative additional income from one recalculation that nobody told you was available. This is the compounding that I want you to understand about what SSA describes as a small change. Nothing about Social Security adjustments is truly small when you trace the downstream effects across a full retirement, especially for couples where one spouse's benefit becomes the other's lifeline. If you have not verified your current benefit calculation recently, if your earnings record has not been checked against the updated threshold, and if your surviving spouse's future benefit has never been part of your SSA planning conversation, these are 3 things worth addressing in a single call to SSA at 1-800-772-1213. Ask them to review your current benefit formula against your most recent posted earnings, confirm your Part B premium tier, and provide you with a survivor benefit estimate your spouse would receive based on your current benefit amount. That conversation is free. What it surfaces may change how you think about every SSA decision going forward. Here is the bottom line on what SSA changed and why it matters. 1 threshold shifted. On its own, it looks like an administrative footnote, but connected to earnings recalculations, Medicare surcharge interactions, earnings test dynamics, and survivor benefit calculations, one small change touches the financial reality of a significant number of retirees in ways that compound quietly for years. The retirees who come out ahead are the ones who understand their own numbers well enough to recognize when something has shifted and what to do about it. The ones who don't are the ones who absorb the impact without ever understanding where it came from. So here is what to do today. Log into SSA.gov and verify your earnings record for 2024 and 2025. Check your current Part B premium, and if it exceeds $185, determine whether SSA 44 applies to your situation. If you are working and under full retirement age, track your annual earnings against the $23,400 limit. And call SSA to request a benefit formula review and a survivor benefit estimate so you have the full picture of how the updated threshold affects your specific situation. 1 call, 1 login, 1 form if needed. The compounding takes care of the rest. If SSA Now gave you clarity today on something SSA communicated in a way that helped no one, subscribe to this channel and turn on the bell. Every update, every threshold shift, every change that touches your retirement income, I bring it here in plain English before it compounds into something you wish you had caught sooner. And share this with someone you know on Social Security right now. Small changes affect them too. I will see you in the next one.